everyone, let's kick off with Resolute Mining, which is a stock that we have been trading recently. And one thing I'd like to highlight here on the Resolute Mining is it has fallen from its high. And again, I have a video a few weeks ago about Resolute Mining. Why I like Resolute Mining is, first of all, obviously the chart formation looks very interesting, but we obviously always use multi-dimensional trading approach that includes technical analysis, fundamental analysis, and macroeconomic view. So for macro view, a gold price is still trading like $3,300 an ounce. So the all-in sustainable cost for Resolute Mining is about $1,750 an ounce. So there's huge margin there, and relatively low for this type of company, right? And some people just been telling me about the risks of this stock. I know the risks. There's really risks because this is a company that mines in Mali, in Africa, and there's always risks there. But the rewards is good as well if you understand where to position in stocks like this. So again, Mali government has cut a deal with this company, and then essentially they had to pay about $130 million of a one-off for the government, and they already came on a huge loss. But that the ongoing tax, no more one-off payments, the ongoing tax now with this tax reform in Mali has added about $250 per ounce on all-in sustainable cost, which brought the cost higher. But that's exactly what we expected anyway. With gold prices around $3,300, so it's no brainer. This stock is highly undervalued, right? And from the technical aspect, we saw this breakout right there, but then I highlight the fact that breakout has to be confirmed in order to be a breakout, and it wasn't confirmed until this second candle came up. And for me, according to BJS 20 strategy, that is now confirmed. That was confirmed yesterday. A technical breakout of this hypothetical resistance level that now has turned into hypothetical support level, 47 cents. Giving or taking plus or less 2-3 cents. That's what I would say here. So hoping now for RSG, Resolute Mining, to keep moving up, hopefully towards 70 cents level. Let's see if my theory is correct. Obviously, we don't get right all the time, but you can see here we had those two huge impulsive buying activity here with high volume, and then this is another high volume buying. This was a sell on high volume as well, but it was canceled with this high volume. And today is still up about 1%. So everything is pointing for a rally continuation right there. Now let's talk about our favorite stock, Zip. Incredibly profitable stock for us. And we have recently traded Zip. 34% profit locked in, and then we got in again because we are expecting this breakout. Now, is there a technical breakout here to the upside? Let's have a look at this. This is the RSI, and if you've been watching my videos, I told you in October, rose my hand and say, oh, you gotta be careful with Zip because it start forming a bearish divergence from this rally here. And that was exactly what happened. If this bearish diversion has highlighted and formed into a downtrend, and ZIP has been downtrend since this bottom level right there, which reached about $1.08. Okay, then we bought recently at 125, sold at 170, and we bought it again, ZIP at 155. So we sell and buy back the same amount of units. So we made 34% with the first rally, and then we bought it again at low levels, the same type of position. And we already made money by buying the same position and sparing the difference, which was about 15 cents. So that's how, we progressive advance into a portfolio. That's how we do it here at BG Trading. And currently on the RSI here, we see the first technical breakout of the RSI towards the upside. I was a little bit worried yesterday, but now if ZIP closes at the current level, $1.74, above $1.70, so I would be a lot more confident this breakout is now fully confirmed, and I would be expecting, hopefully, to move towards the long-term moving average right there, the pink line right there. The beauty about these guys is that ZIP's still trading at technically discounted price. Even though we had a significant rally there, it's still trading at technically discounted price. That's very exciting because we haven't seen ZIP trading at technically discounted price for the short term and for the long term since December 2023. Yeah, that's huge. So very exciting times with ZIP. Hopefully we are right. Hopefully the market doesn't sink in the next few weeks, But again, we applied a multi-dimensional approach with ZIP. We looked into fundamentals. Fundamentals are stronger than ever. Technical formation is now confirming potential breakout of the downtrend. Right? And macro getting there. We are hoping for Fed to cut rates again. That will definitely help ZIP. I think that's what going to be driving ZIP into a high, potentially. Right? So that's ZIP. Now let's talk about Cettire Limited. Stock that we made a lot of good trades, but has been painful in our last trade. We lost a big chunk of money. So Cettire Limited, and then again, I'm not shy to say we make money, but we lose money sometimes in the stop losses, and we have to take stop loss there. We had big position, right? And then unfortunately we had this Trump tariff problem, and there was a huge sell-off. Look at historic data for Cettire, CTT, right? And some people start saying that I'm getting emotional about this stock. No, I'm not getting emotional. This is a trading stock, right? A stock, a growth stock that has been profitable. Nothing wrong with that. It has been profitable, right? Until the first half of this financial year, the company is profitable. And then this last quarter was a net loss, EBITDA loss. But has been profitable. That's why we've been trading, right? Now, obviously, things has gone south for the company, but it's still going to be looking at near $1 billion revenue. That's pretty big for Cettire. I think they will start investing in marketing and a lot more now because they want to pump this luxury industry as a result of slow economy around the world, with Trump's tariff and everything else. But what attracts me in this particular stock right now is that we are very close to a critical multi-year support level. And if you look here, when since the inception of the stock on ASX, right, there was 838%, highlighting for the fact this company was a huge net loss. And the stock went up in 2021, mostly as a result of interest rate cut, okay? And then went down again because still a net loss company, right? And then went up again 1,000%. Actually, 1,176% when hit the all-time high once again around $4.80. There was a huge rally, right? Now, this company is still, I think, still profitable. It's still going to be profitable, okay? Honestly, this quarter, this past quarter is the worst quarter. First quarter of any calendar year is one of the worst quarters for retailers. We all know that. And that's why they're saying that you buy stocks in, sell all the stocks in May, because the companies start reporting the first quarter of of the year. So it's gotta just think about that. And now, in my opinion, if you look at technical aspect, this stock is incredibly cheap now, right? Would I be buying it or not? And I'm going to wait for technical bounce or to reach this area here, right? This is the buying area in my opinion, okay? It's highly shorted. It's about 10% of the issued shares are shorted at the moment. And the multi-year historic hypothetical support is currently into the range of 35 to 45 cents. We haven't yet entered. This stock hasn't yet entered into this range, but it could enter very, very soon in the next few days. If you see, still falling, goes up, but then ends the day down. Okay, but I would be looking at potentially attempt buying under 40 cents. I'm not holding this stock now. We sold at 95 cents. And then once again, that's why it's so important. So important. You know how much we lost in this particular stock? I lost in, this is only the last trade because we made a lot of money before, right? $27,000 on this last position, right? My portfolio is $90,000 up, 34% up right now. That's what it is. But I lost $27,000 on this one alone, okay? And I sold that 95 cents stop loss. 95 cents. Imagine if I haven't used stop loss. The whole profit for the year would have gone. But now I'm interested again on trading this stock, waiting for CTT to reach these levels. And once reach this level, I will start building a position slowly. Okay? And watch out for another breakout on this level here. Okay? This is CTT. Now getting very, very, very close. Tyro, this is another stock that we have been trading, not recently though, but I'm going to talk about Tyro itself right now for you. Interesting formation. However, one thing I don't like in Tyro is still very low volumes still. Look at that. Very low volume still. I would like to see a higher volume. It's still in downtrend. And it's still not a buy for me. The problem with Tyro, and the reason it has fallen that much, is because there has been a conversation and negotiation with SmartPay, which is a New Zealand similar payment company, and a takeover opportunity for Tyro potentially taking over SmartPay, which, by the way, is listed on the ASX as well. And the reason the stock fell is because investors, Tyro investors, they don't know where Tyro is going to take the money out. And most likely could be from capital raising. And if capital raising is the answer for that, then there will be a dilution in value for the short term. And that means we could see Tyro going towards 50 cents. Yeah, and that's what everyone is worried about. But if the takeover doesn't happen, if Tyro walks away from the takeover, which I think they shouldn't, but if that happens, then I would see the price going straight line, potentially surpassing $1. Okay, in the short term, right? Now, if Tyro takes over Smart Pay, then long term could be positive, even though it would be diluted to fund the acquisition. So for me, I'm not interested in Tyro right now. The stock has bounced right here from, that's why, look there, has reached these COVID lows right there. It's actually looking very interesting in my opinion. Like if you ever looking to buy Tyro, you could buy Tyro now from this technical formation, knowing, okay, remember this is not a financial advice, knowing that they might have to raise capital, okay? You don't know how they're going to fund the Smart Pay business if they acquire. And hoping for they walking away from that bid, and then the stock could go up really quickly. This is my view on Tyro. I won't be buying that because it's a bit too messy. Even though it's really low, there are plenty of other stocks trading at very low levels, as I'm going to be showing in this video still. Okay, so Tyro's technically buying opportunity, however, a lot's going on, just gotta be careful with Tyro. Let's move forward to a Northern Star NST. So this has been a great stock. We locked 94% profit last week, right? And this is why, because we saw this first Hekenash candle right there, right, on the downside. And today's report wasn't that great for Northern Star and appears to be overvalued. Would I be looking buying again? Potentially, yes, if I'm able to buy NST. First of all, because I already bought that and sold. So we have done the trade already. So I'm not, normally I tend not to look back into stocks that are overvalued because historically, this is one of the rules that I have created because I used to do that and I used to lose the profit again. But I know this could come down all the way here to $15. That's where I would be looking at buying at the long-term moving average because I'll be buying at the technically fair price. If gold price is still above 3,000 US dollars. Okay, Northern Star, not a buying for me at the moment, even though it has came down about 17%. Jesus Christ, that's a big drop here. 17%, yeah. Even though it came down to 17%, I'll be interested buying if it goes close to this pink line right there. That's where is a buying opportunity for me, in my opinion. So, not touching in Northern Star, but I'm interested in the Resolute Mining for the reason I just explained before. Linus. This is stock that we bought 2 weeks ago at $7 together with our VP members. The reasons we shared before, because China was sort of blocking rare earth to go into US, and then Lynas is the biggest rare earth producer outside of China. There was no brainer. But we did our trade, 20% locked, right? I've seen people telling to buy Lynas online. We already made our trade, okay? We're not going to be touching at right now anymore. We did 20%. we out. We'll be buying back, yes, if Linus comes down to technically discounted prices here, or at least reach this red line again, which is currently sitting around 750, pretty much. Yeah. Maybe I'll be looking buying again. But not now. Trade is done. Happy days. Congratulations to all VIP members that did this trade. Move on. Fly Center. This one is a good one, in my opinion. Recently, earnings downgraded. Okay. But it's trading at technically discounted price, not only for the short term, but also for the long term. Right? I like this stock very much now. Everyone is freaking out. Fly Center is still profitable. Still profitable. Not only is it like this huge crash here in COVID, where they went to a huge loss and dilution. Now they are also $200 million buybacks has been declared. Now, remember when Fly Center was $60. When COVID hit, there was 3 times capital raising. And the capital raising was combined, I think it was about $1.3, $1.4 billion diluted into a shareholder value. That's huge. The buyback was only $200 million. There's still a long way to go in order to get Fly Center back into which was before. In fact, last year, our projection was that when Fly Center was at $60, okay, the similar price after dilution would it be $27, okay? Would it be about $27? And after dilution, after those multiple capital raisings, and it actually hasn't actually reached that since this share price recover. So which means the hypothetical support level for Fly Center is currently sitting at $9.50, more or less $1, which means if you're buying around $10.50 or $8.50, you're buying within the hypothetical support range, the long-term hypothetical support range. Okay, that's what I'm saying. But for the long term, this is already showing great fundamental value in my opinion, right? You want to try pick the bottom? So that's where we go for. The stock that we are watching. Are we going to be buying now? That will be disclosed with our VP members only. Okay, apologies for that. If you're interested, go to bgtrading.com.au and sign up for one of our plans. And the last one, I have been personally trading this stock, is DroneShield. DroneShield, look at this formation right there. Strong fundamentals, currently trading at FOMO levels, but strong fundamentals. Okay, going to be huge growth, right? Macroeconomic is favorable for this particular stock. Volumes are pretty chunky as well. But I wouldn't be buying now. I'm just probably exiting any position right there because it's closing to the resistance level right there, right? And I'll be looking at something like this in terms of trading range. Yeah, look, if you're going to be buying again at the low $1, right? That is my opinion. Now, if we're able to hold DroneShield, I think they had combined cash receipts for 2025 and 2026, $1.3 billion, which in revenue could convert into $500,000 for this financial year. That would be a huge growth. That's why the stock's sort of soaring now. Okay, so DroneShield, huge momentum right now. But look, either hold or not buying right now, or be waiting to sort of buying back if you're looking to trade the DroneShield. Okay? DroneShield for me is a hold. That wraps up the video. Thank you very much. Let us know what you think about all those stocks. Okay, I'm not gonna edit this video too much. Okay, so good luck on that, and I'll see you in the next video. Bye.